It is Money Monday, and today we're talking about the impact attacks like those in Paris can have on financial markets and what you should keep in mind. We are joined now by Richard Del Monte, founder of the Del Monte Group Wealth Management out of Alamo. Richard, thanks for being here with us.
It's great to be here. Thank you.
So let's talk about the impact. Now it's been more than a week since the attacks, at least in Paris.
Right.
What are the financial impacts globally and also here in the States? And does it matter where the attack happens?
Okay. So initially what happens is in the first day or two after an attack, people kind of freak out and the markets will go down. But what's interesting is if you go back all the way to back 36 years to 1979 when we had the Iranian hostage crisis, and you looked at every other foreign terrorist attack since then, the average return over the first week after an attack, believe it or not, is plus 0.2%.
Wow, okay, we're looking at the numbers too. Keep going.
Yeah, and so then a year later, the average is about over 14%.
Wow, okay, and then 9/11?
And if you go back to 9/11 now, so that was the big daddy for the U.S., you know, homegrown terrorism and a big impact here. The markets were closed for the first week afterwards, but then when they opened up again, the markets were down about 14% in the first week. But interestingly, within a month after 9/11, the markets had recovered that loss.
So we are talking about you're scared. They are what they call knee-jerk reactions.
Yes, exactly. And they don't really impact the long-term returns of the stock market. The only thing that really impacts long-term returns is how the companies are doing.
Okay.
So, you know, is terrorism going to really impact how many trucks Ford is going to sell, or how many people are going to buy things from Amazon, or how many phones, iPhones, Apple's going to sell? Really, no.
So why does this happen right after? Is it because the market doesn't like uncertainty and people
Exactly.
Is that it?
And people get afraid. The markets do not like uncertainty, and so people will sell off. And then they kind of regain their composure. It's really based on emotion.
What about the economy in general? If you think about what's happening in Paris, at least a couple of days after, the shops in that area were closed down, parts even now, Brussels, that's shut down after 9/11. So the economy does take a hit.
Temporarily.
As a whole.
Temporarily. But soon people want to get back to their normal lives. They're sick of it, you know, they just want to get back to going out to eat, they want to start going to the movies, they want to start buying cars again, whatever they do. So there's a certain period where a window where they will stop everything and just panic and freeze.
Okay.
But after that it goes away and we get back to normal.
Okay, what about the everyday person out there, a working person working towards retirement, and we see our money and we're concerned, we need to have money when we retire. What should we keep in mind when these emergencies, these attacks happen?
The best thing to do is remember that they're very short-lived. It's not going to have legs. It's not going to be an impact on the markets over any more time than maybe a month.
History has shown us.
History has shown us. And if you have a little bit of extra money, like maybe in bonds or something safe, buy a little bit more of the stocks when they go down and they go on sale. People don't think about them that they're on sale for right now.
Right, no, you don't think about
Anything else you would buy, you know, if something's on sale in the store, people run out and buy it. But when stocks go on sale, people run for the hills. They should do the exact opposite.
Okay, all right, good stuff to keep in mind. We have Richard Del Monte with the Del Monte Group Wealth Management in Alamo. You are the founder there. Thank you so much, Richard.
Thank you. It's great to be here.
All right.